Hi guys, this is Temilo and welcome to my channel. Today we'll be talking about gaps in currency pairs. If you are a subscriber of this channel, you know that I've talked about gaps before, but that has been on indices. I always show you examples of gaps on NASDAQ most especially. And the same way you trade gaps on NASDAQ on indices is the same you trade on currency, just that most times currency pairs don't usually come with gaps on the chart, but you find gaps mostly on indices pairs. So today we'll be using AUDUSD as a case study. At the beginning of this week, a gap was cited on AUDUSD, and in this video I'll be showing you how you could have capitalized on that gap, because gaps in the market. So on this particular pair right now, this is where we have gap in the market. You can see there's no candle right here. Okay, this is just a blank price from around 0.68900 to 0.68859. So, and anytime we have gaps like this is inefficiency in the market as well, and price will always come back to fill this gap up. Okay, later on price will come back and all of this blank space will be filled up. So anytime I see gaps in the market, I'm always very excited because I know profit is coming in. Okay, but you don't just trade towards gaps. Okay, you still want to do your deal analysis, or the analysis you would do normally on your page. You still want to do them. You don't just want to get into trades just because you side gap and just decide to buy at any point in time in the market. Okay, and mind you, there's difference between gaps and imbalance. Okay, so gap is a blank space, is a total blank space, while imbalance has candle, but the candle will, there will be absence of another candle. Like for example, now this is a bearish candle. You can see at this particular point this candle was huge and had a high volatility, so there were no presence of bullish candles at this particular point. Okay, so this is imbalance. Okay, whereas this is gap. Okay, so don't confuse the two. So right now let's get into it, and this box right here that you see is my indicator turned on, my my Asian session range. Okay, I have a video on that. If you are yet to watch, please do. It will really assist your trading strategy. Okay, so how could you have capitalized on this trade? So moving to the daily time frame now, as you can see, we've been able to mark out the gap that we see right there, and just as you can see, now we want to do analysis. You see that we had a break of structure right here when market was pulling up all the way up here, and later on price came back to mitigate this demand right here. Okay, so we are presently trading inside a demand zone, which is a good thing for us as we are looking for buy trade. So moving down to probably the 1 hour now, you can see that this is the zone from the daily time frame, and just below the entry point on the daily time frame, you can see that we have some little imbalances present at this particular price here from the daily, but overall price is already in the daily demand. Okay, price is already here, and but just below we can see that we have this other imbalance right here that is yet to be filled. Okay, so this right here. So, and I must really say, when I cited this gap, I was excited. Okay, but the reason why I didn't end up taking this trade was because of this imbalance that was still below where price was reacting from. So I was hoping price may likely come into this zone before we start looking for buys. Okay, but I was wrong. So there are times like I always say on this channel, there are times not all imbalances will be filled, okay? Not all imbalances will be filled at every point in time. There are times where markets will leave it and go, then come back in the future another time, okay? So let's just move on. And moving now to the 1 minute time frame now. You can see on this particular day, let me remove this. So we already know we are trading in a demand zone, right? So on this particular day, for me, I do not trade the Asian session, and all of this price action right here is the Asian session price action that took place during the Asian session. Okay, so and this is the high, this is the low. So for me, I always wait for the London session after this Asian might have printed out for price to either clear out the low for me or clear the high, so I can know the next direction the market is heading for. Okay, so now that we are trading in a daily demand, okay, so we can actually start looking for longs, especially because the Asian range low has now been taken, and once the Asian low is taken, there is high probability the market is going to clear the next the Asian range high. Okay, so you start analyzing the markets to look for entry opportunities to get into the market. And as you can see right here, we've been able to sight this gap, and I know that gaps will always be filled up. Okay, so now that the Asian range has been cleared, you want to mark out your structure to wait for a confirmation entry. Okay, so if we should have our structure from right here, you will see that this was the leg of price that broke below this last structural low that we have right here. Okay, and just as I always say, in this higher time frame push down to the downside, we always have internal structures. Okay, so internal substructures that can be found on the lower time frame. Okay, so all of these price action that were printed are lower time frame structures or substructures, or like I love to call it, internal structures. Okay, so these internal structures will assist you um, to know the lower high or the lower low that needs to be broken in order to get your confirmation. So just as we can see, let's just take it from where this was broken. We can see that we had this high, we broke this low right here, then we created a lower high. So we created a lower low, a lower high, a lower low. Then this gave a push, but later we had the final push down. Okay, so now looking at the structure now, this is the last low. This is the last low, and this low, as you can see, cleared out this sort of support that we have right here. Okay, so at this particular level, this week cleared out liquidity of this support zone right here. And when we are looking for confirmations, we want to see that the lower high that gave the last low was have to be taken, right? And this was the break of structure. This is the lower high that gave the last lower low. So once we've been able to get a break above it, that gives us the confirmation that we are going longs. And not just this lower low was taken, this was also taken, and also this. So markets buyers are now really in the market. Okay, so we know we have the presence of buyers in the market. So the next thing for us now is to be looking for entry opportunities. Okay, you want to start looking for demand zones, you want to start looking for imbalances that you can trade off from. And just as you can see right here, when the markets push all the way up here from this to this to this, we can see that market left behind this unmitigated demand zone, and the candle here was big, so signifying that we have imbalance right here. So this will be the zone where we want to get into our trade. Okay, so and it's very clear. You can see it's so clear. So now all we need to do now is to set a buy limits entry, and you do not want to have your stop loss at this particular low. I always mention it not to have a tight stop loss. Okay, you always want to give your trade some room to breathe. Okay, so now I will prefer my stop loss moves down to this level. Okay, so I'll check how many pips do I have. um how many pips do I have right there, which is about 7.6 pips. It is still below 10 pips and is a good thing for me. Also, you might argue that why not have it at this low right here. Of course, you can as well have it at this low, because from right here we can see a shift in market structure. Okay, we already have a shift, and this was now responsible for this whole push to the upside. Okay, but since this is still below 10 pips, I'll just prefer to have it at this particular level right here. Okay, so now, so you can have yours at this level, it's fine, but just to be safe, I'll just have it at this level. So let's see, and for our take profit now, our take profit is for the gap that we were able to sight at this place. Okay, so now all you need to set your take profit at this level right here, and you can set it just before the entire tab, because just like I always say, entries and exit matters a lot in trading. Okay, you want to make sure you are setting your take profit at zones where markets will actually get to and not reverse back on you. Okay, so we can have it at that particular level, and this is about 1 to 5 RR, which is very excellent. Most times you always want to have your RR greater than 3, like I always advise students in my academy. Always have your RR up to 3 RR, but this gives us about 5 RR, and we have a total of 40 pips in take profit. Okay, though looking to the upside, there is more room to trade further into these eyes. Let's quickly move to the 1 hour time frame now. Moving to the 1 hour time frame, you can see that aside from the gap that we have right here, we still have lots of imbalances to be filled. We have imbalance at this level to be filled. We have little at this level. We have right here as well. But that is not our focus for this trade. Actually, you can actually have your take profits to get up to this level or this level, depending on how long you want to stay in your trade. As you all know, I'm a day trader. I love to be in and out of my trade in a day, especially probably during London session. What I now do these days is, during London session, when I get into trades around my country and the UK shares the same time. So around 10 a.m., 11 a.m., most times I want to get out of the trades I got into from 8 a.m. during the London session. Okay, so around this time I want to be out of my trade. So on this particular trade, if I actually took the trade, I'll be exiting at this gap level, because this is my main focus and this is my main target. Okay, so let's move back to the 1 minute time frame now and see if we will actually get tapped into this trade. Okay, so as you can see, market came back here. Let me move to a higher time frame, like the 5 minutes, so we can go fast with this trade. And moving to the 5 minutes now, you can see that we got tapped in at this particular level right there. Price tapped us in perfectly, and there were actually more entry opportunities, but my focus, just like I said, I didn't end up taking this trade because my focus was on the imbalance that was still on the 1 minute time frame, and I just had my alert set for when that imbalance will be filled. I didn't really follow what was going on right here. I was on other pairs. As you all know, EUGU, Nasdaq they are my favorite pairs to trade. So I was focusing on those other ones, and I just set my alert at the H1 imbalance, thinking price was still going to fall a little bit down at this level. So I didn't follow up the price action. If I had done that, I would have been able to cite all of these break of structure and even re-entry opportunities from right here. Because just as you can see, as we are pushing forward again, the lower high that gave us this last low into this demand level right here was broken above, and we left another point of interest that we could have taken a sell trade from. Okay, so this was another opportunity to take a sell trade. You can have your stop loss at this last low now because we've taken out the lower high that pushed here. Okay, but I wasn't on the chart anymore, and let's just continue right there. And as you can see, the gap was filled up. Okay, you can see the gap was filled up. Okay, so this is how good gaps are in the market, just by knowing that they will be filled up. Okay, that will allow you to make profit on that particular day when you cite it. And most times we always have gap prints at market open on Sunday. Okay, so gaps are always found during market opening. There will be jump in the market. Okay, due to market opening as a result of the close from Friday. Okay, so this was a lovely 1 to 5 hour trade, and this would have been a nice way to capitalize on this gap, but I ended up missing out of it. But as you all know, we can't catch all trades, and we'll miss out on some, we will win some, we will lose some. Okay, but in case of another time, that was why I made this video, so we can capitalize on gaps. Okay, that'll be end of this video, and I hope it was beneficial. I hope you learned something from it, and till next time when I'll be bringing another educational videos, do have a profitable trades in the foreign exchange market. Thank you. Bye.